Hey mathematicians, today our lesson is going to be over financial institutions. Our TEK is 4.10e, describe the basic purpose of financial institutions, including keeping money safe, borrowing money, and lending. Let's go ahead and read our learning goal together. Today I am learning the purpose of financial institutions so I can estimate and solve real-world problems. I'll know I have it when I can list examples of financial institutions, I can describe the purpose of financial institutions, and I can describe a time when someone may use a financial institution. Let's look and see why these things are important. When are you going to use them in the real world? While money doesn't in fact grow on trees, there are ways to increase the amount of money we have. Being knowledgeable about financial resources helps us to make informed and effective decisions about our money. Having an understanding of how financial institutions work can help us be responsible with our money. We also need to understand the difference in the types of financial institutions. A bank and a credit union may both handle money, but are fundamentally different in how they operate. Okay, let's quickly review our vocabulary before we get into our lesson. Financial literacy is the ability to understand how to manage money. Income is money earned or received, money coming in, income coming in to your bank account. For example, paycheck, birthday money. Expenses is a payment for goods or services, money that is leaving your account. For example, paying bills or buying a toy or video game. Financial institutions are places that focus on dealing with money such as investments, loans, and deposits. For example, a bank or a credit union. Profit is money that is made in a business after all the costs and expenses are paid. Okay, let's go ahead and get started in our mini lesson. Let's talk about money. Who doesn't love talking about money? Money is awesome. How do you earn money? Money that is earned is called income. Income is money earned or received. What are some types of income that you can think of? How do you spend money? This is called an expense. Expenses are payments for goods or services. So a good is something tangible that you can hold in your hands. A service is something like getting a haircut, having your lawn mowed, something that you just don't want to do, so you pay someone else to do it. Can you think of some type of expenses? So some types of expenses, you have variable and fixed expenses. Variable expenses are expenses that can change or vary. For example, you have the electric or water bill. You don't use the same amount of electricity or water each month, so these expenses are expected to change, right? Those of us who live in Texas, when it's 110 degrees outside, we want to be in the air conditioning. Well, guess what? That uses more electricity, so our electric bill goes up. Groceries are also another type of variable expense. When you go to the grocery store, unless you buy the same thing every single time, which is pretty doubtful, your grocery bill is going to be different every time you go. And car maintenance, right? We don't need to buy new tires for our car every month. We don't need to get an oil change every month. Those types of things vary. Fixed expenses are expenses that stay the same. So every month, this bill is going to be the same. So for example, our rent or mortgage, those bills we can expect to be the same every month. Insurance, so house insurance, medical insurance, these types of things also stay the same for an extended period. So yes, your medical insurance may change every year, but when you're paying those monthly bills, that payment for the entire year is going to be the same. Also, phone bills. So this one can be a little confusing because it really depends on if you have a contract or if you're like a prepaid phone. So if you decide to buy a phone on a contract, you agree to pay the same amount every month for 1 to 2 years, and then you can renew your contract or change it. If you use a prepaid phone, then you buy your minutes in the store, and it may change depending on how many minutes you want to purchase. So why are financial institutions important? So financial institutions take in your funds. These are called deposits. You're depositing your money into the bank. They keep this money safe, and they allow you to take out money. So this is called a withdrawal. When you withdraw something, you're taking it out. They also regulate these transactions, these deposits and withdrawals, and they lend money to those who need funds. You might know this as what's called a loan. So some types of financial institutions are banks. These offer checking and savings accounts, loans, and lending, and these are generally for-profit institutions. Credit unions resemble banks. They offer checking and savings accounts, they do loans and lendings, but they serve a very specific demographic, such as teachers or military, and they are non-profit institutions. Brokerage firms help you buy stocks, bonds, and invest your money. Some types of accounts for financial institutions offer are checking account. This is for everyday use. You put money in a lot, you take money out a lot. Generally, when you're running your debit card every day, this is coming from a checking account. A savings account is an account that you put money into and that you don't really take out a lot from, because this is money that you're saving for a rainy day and you want to see your money grow. An investment account allows a company to borrow your money in hopes that you will earn more in return. And lastly, a credit card. This is borrowing money from a lender. So any money that you borrow, you have to not only pay back, but you have to do what's called paying interest. So if you borrow $10, and this is just an example, you may have to pay that $10 back plus another $5 in interest. So you really want to be careful when using credit cards or taking out loans, because you do have to pay more money back. All right, let's do a quick check for understanding before we get into our guided practice. If I need to borrow money, where can I go? I could go to a bank or a credit union. If I want to borrow money from a bank, do I have to pay them back? Yes, with interest. That means I'll pay back more than I borrowed. Think of it like the fee for using borrowed money. If I want to keep my money safe, where can I keep it? In a checking or a savings account. All right, guys, great job today. I will see you for our guided practice.